What's happening, everybody? So welcome back to the desk of Darren Rickwood, mortgage loan officer, social media superstar. Well, 1 out of 2 isn't bad. So today we're actually going to be talking about what we as mortgage lenders look for in qualifying a borrower. I've had a lot of questions about this, actually doing trainings with realtors and groups and teams to talk about what we actually look for, just so they're better informed and have a lot more tools in their toolbox when they're meeting with prospective clients. So let's get right into it. Number one most important thing we always look for is credit score. It is the most important thing when qualifying a borrower. It tells us whether or not we're even collecting documents right away. If you are in need of credit repair, let's say, that's something we'll look at. We'll run a simulator, we'll pull your credit, analyze it, tell you what needs to be done, and then within pretty close parameters tell you what your score is going to go to and how long it'll take to get there by doing what we suggest. If your credit's great, we're moving forward, we're collecting documents right away, because that means you're moving on to the next stage, which is house hunting. So credit's very important. We also look at income and employment history. Why is this important? Well, there's no more no-doc stated loans when dealing with a lot of these home purchases. Yes, you can go outside the box and get crazy, maybe find something, but normal loan, government-backed, 100% financing, first-time homebuyer programs, we're looking at income. We're looking at your employment history. Have you been working the same place for 2 years? If not necessary, but you need to be in the same line of work. You don't want to go from being a nurse to being, let's say, an IT professional unless you have training and background. It's kind of hard to justify the change in income unless you're salaried with a history. So that's going in depth, but income, employment history, very important. Income's important because a lot of the programs are income based. If you make too much amount of money a year, you don't qualify for some programs. So we look at all of it. So all this comes back to, oh, Mr. Loan Officer, I really don't want to give you all my documents. Do you need all of that information to pre-qual me and give me a letter? I just want to go look at a house. Yes. Do you qualify for the $350,000 house you're going to look at? And the agent spending their time and going around and taking you to see these houses? Do you even qualify for them? Do you know what the payment's going to be on that house? So very important to look at income, all of that. Debt to income ratios. Do we know what that is? So debt to income ratios, we look at 2 things. We look at your housing ratio and your total debt ratio. Housing ratio is the proposed monthly payment divided by your gross income. That gives us our first ratio. Second ratio is your total debt. We take the proposed housing payment plus all your monthly debts, minimal credit card payments, student loans, car payments, everything, add them together and divide that by your gross monthly income. That gives us our debt ratios. That's what we look at when we're looking to qualify you for a loan. Down payment, very important. We talked about this a lot before, but you don't have to have a ton of money saved up to buy a house. Come see us, 100% financing, grants. So we definitely look at money. If you're going to be putting money down, we look at where it is. Is it in your mattress or is it in your bank account? Hopefully it's in your bank account, because mattress money doesn't count. Sorry. Employment stability. Have you had 12 jobs in the last 6 months? Kind of important. Loan to value ratio. So this is how much money you're putting down. So if you're buying a $500,000 house and putting 20% down, meaning $100,000, financing $400,000, your loan to value is an 80%. Pretty simple, right? 100% financing, you're financing 100% of the sales price. Pretty good, right? I know. But those are the most important things we look at when putting together a qualifying letter. Let's call it a pre-qual letter. When we're talking to a buyer and pre-qualifying them to go out and buy a house. Now we adjust that every time for every house. So if you find one house and another, There are gonna be different prices, different taxes, different insurance. We look at all those things too. But keep in mind, this is what we're looking for when we're doing our job. Hope this helps. If you have any questions about any of these, please give me a call. I'm happy to talk to you and schedule a time. Thanks. You guys have a great week.